You have $1,000 and you want to invest it, but every article you read gives you a different answer. This video is the last one you will ever need to watch on this topic. 4 steps, no jargon. Let's go. Before we invest a single dollar, 2 things must be true. First, you have no high-interest debt above 8%. If you have credit card debt at 22%, paying that off is your investment, a guaranteed 22% return that nothing in the stock market can match. Second, you have at least 1 month of expenses in a savings account. If either of those is not true yet, that $1,000 goes there first. If both boxes are checked, Step 1 starts right now. Step 1 is account selection. This is the most skipped step and the most expensive mistake beginners make. Most people open a regular brokerage account and unknowingly lose thousands of dollars in taxes over their investing lifetime. For your first $1,000, open a Roth IRA instead. Here is why this matters. Every single dollar you earn inside a Roth IRA is tax-free forever. Not tax-deferred, tax-free. On $1,000 growing to $10,000 over 30 years, that is potentially $2,000 in taxes you never owe. Best platforms for absolute beginners in 2026. Fidelity and Vanguard. Both have 0 minimum balance, 0 account fees, 0 excuses. Step 2 is the actual purchase. And if you have been overwhelmed by which stock to pick, which sector is hot, whether to buy crypto, here is the honest answer. You do not need any of that. Buy one index fund. That is the entire strategy. 2 options for beginners. Vanguard Total Stock Market ETF or Fidelity 500 Index Fund. VTI tracks the entire United States stock market, every single public company in America in one fund. FXAIX tracks the 500 largest U.S. companies, not the S&P 500. Historically, the S&P 500 has returned approximately 10% per year on average over the past 100 years. Your $1,000 becomes $2,594 in 10 years without adding another single dollar. The expense ratio on both funds is less than 0.03%. For every $1,000 you invest, you pay about 30 cents per year in fees. Step 3 is automation. After your first $1,000, set up an automatic monthly contribution, $50, $100, whatever you can. Most platforms let you schedule automatic investing. The money moves from your checking account and buys your chosen fund automatically on a set date every month. You never think about it. You never forget. You never panic sell during a market drop because you never see it happening. Here is the math on $100 per month at 10% average annual return over 30 years. $226,048. You personally contributed $36,000. The market added $190,000. Step 4 is the hardest and the most important. Do nothing. The market will drop. It always does. In 2020, it dropped 34% in 5 weeks. People who panicked and sold locked in their losses permanently. People who held, or better yet bought more, doubled their money within 18 months. Every market drop in recorded history has been followed by a full recovery and new highs. Your one job as a beginner investor: do not sell. Delete the investing app off your phone for your first year. Time in the market will always beat timing the market. 4 steps. Open a Roth IRA at Fidelity or Vanguard. Buy VTI or FXAIX. Automate $50 to $100 per month. Do not touch it. The simplest approach has beaten over 88% of professional fund managers over 20 years. Start today. Next video. Bankruptcy myths that are keeping you poor. And the truth nobody tells you. Subscribe so you do not miss it.